Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today's the 10th of February 2020, so yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and yep, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. And yep guys, feel free to visit us here on jfdbank.com and click on the research tab right there. Right, now then, let's jump into the charts. Now the first one I want to touch on here is the FTSE100. Basically, for last time when I talked about the FTSE 100, basically what I was saying, that in a way, if this little short-term downside resistance line taken from the high of the 17th of January holds, then we could see another round of selling here, potentially leading this one back down. And for now, everything's kind of working according to plan. We did see this slide. We are still seeing the slide, and we can see that the price is falling below its 200 EMA on the 4-hour chart. So for now, what we're targeting here is this little territory around the 7,393 level, approximately around there, basically marked by the low of the 27th of January and near an intraday swing high of, or should I say actually near an intraday swing inside swing high of the 31st of January. So again, for now, there's something to consider. We may get a hold up around here, but the big interesting picture, or the big interesting thing would be around this area, with the fact that if, let's say, we get a nice rebound back to the upside, we may be getting ourselves a nice inverted head and shoulders pattern here. But again, that's too early to talk about something like that, just to kind of keep an eye on. And as I said, for now, that's what we are targeting here, this area near the 7,393, because if it holds and we see a nice rebound back to the upside, and then if we see a break of this area here, the 7,503 territory, roughly around there. Now this is where it could become very interesting for the buyers, or in a way for those who are more on the cautious side. It could just wait for a push above the 7,534 mark here, which is the high of last week, and then yes, this would confirm a forthcoming higher high here, and would also confirm this potential idea of seeing maybe a nice inverted head and shoulders pattern. But again, that's a bit too early to talk about that. Just something to keep an eye on for you guys, in case this works out. If it starts dropping below this 7,393 territory, and starts drifting further south, then well, consider a potential test of this this medium-term upside support line taken from the lowest point of October. For now, guys, all eyes are on this little territory right here near the 7,393. Now then, Dow Jones Industrial Average, guys. So now I've looked at this one a while ago, and basically, after it managed to create a new high last week, a new all-time high, and that was around the this level right here near the 29,407 zone, the index drifted lower, and let's say, looking at the cash index right now, we can see that the price is currently balancing around the 28,990 zone. So basically slightly below this psychological 29,000 zone. Not far, of course, don't get me wrong, it's not the end of the world still, but nevertheless, of course, it creates this this little pessimism that we may see a bit of a drift lower. That said, looking at this picture here, in a way, if we draw, we can see that we can mark some interesting support levels here, potential support levels. Previously they acted as good areas of resistance. Now they could be taking the roles of support. So basically the last one to consider could be around the 28,905 zone, and if it holds, we could see a nice rebound and a pushback to the upside. Of course, this is something that would come in line with the idea of that, the one that I've mentioned around the FTSE 100. So but again, if this suddenly starts dropping below the 28,900 zone and falls below these EMAs here, the 50 EMA, then, well, I mean, it could be opening the path for itself towards the 100 EMA, or even the 200 EMA here on the 4-hour chart. But again, probably by the time it could drift here, this EMA would be probably somewhere around the lowest point of January, near the 28,170 zone. So again, for now, guys, be very careful. If, like I said, if it starts dropping heavily below the 28,900 zone, then, well, consider a potential move back down towards the lowest point of January, near the 28,170 zone, where it could also test the 200 EMA on the 4-hour chart. In terms, for those who are a little bit more on the cautious side, I would say you could, of course, wait until this, let's say, reverses to the upside and pushes above the recent, or should I say, the all-time high figure, then and then kind of aim for the higher high. But let's see how it plays out here near this 28,900 zone, or in other words, around this territory here, and if it gets a nice rebound, wonderful for the bulls. If it starts dropping below this, then, well, I mean, we could consider a bit of a decline here. Now then, quick mentioning of the US dollar against the Singapore dollar. I talked about this one this morning, and basically what I was saying this morning, that this is kind of currently a nice risk pair, or let's say risk gauge for the coronavirus. And what I was mentioning this morning was that if we get a bit of a correction here, then keep your eyes on the 1.3880 zone. So and this area acted as a perfect area of support, and this is what I was mentioning this morning, guys. Basically, that if it struggles to drop below the 1.3880, well, I mean, we could see a nice rebound and a push back to the upside here, where we could continue pushing north, maybe even all the way here towards the highest point of September, near the 1.3942 zone. Again, we'll be very careful for now, because on one hand we do have a very overstretched, very overbought pair here on the even on the daily chart, but on the other hand, it's still the weakness here, the kind of the sensitivity of the Singapore dollar to the coronavirus is very very high. So that's why we are seeing this push higher. Of course, the dollar is on the stronger side as well here. So all this is kind of adding up to this beautiful one-way traffic move here. So for now, guys, we're gonna be very careful in a way to consider a further move higher. We'll wait for a push above the let's say today's high, which is roughly, and let me just get rid of this Fibonacci for now very quickly. So a push above the high of today, which is roughly around the 1.3923 zone, would confirm a forthcoming higher high and open the path towards that highest point of September. I do understand it's only about maybe 20 pips away, but nevertheless, keep your eyes on this territory, guys. Very important area, because if this gets broken now, well, I mean, this could be flying even further north. But I'll stick to the same idea, guys, as I've mentioned this morning. If we get a drop below the 1.3880, well, I mean, we could consider a bit of declines, but let's see how this is going to play out. USDJPY, now very quickly on this, also something that I've mentioned recently, and to be more specific, this morning in a Trader's Espresso. Basically, looking at this picture here, we can see that it's currently kind of still balancing above this 109.65 zone, and this is what I've mentioned this morning. Basically, if the rate continues to balance above this area, we could see a nice rebound and a pushback to the upside. But given that the equity markets are currently on the lower side, and they're sliding a little bit lower. We are seeing a bit of buying interest in the yen, in the Japanese yen. So that's where the kind of the little weakness here is coming in into USDJPY. But again, all eyes still are on this level here, the 109.65, because as you can see, it keeps overshooting it, but it still even cannot close a 4-hour candle below this. So what we're going to do here is we'll aim for, or we'll wait for a nice close, at least of a 4-hour candle, in order to consider further declines. Then of course we will aim for this 109.2627 zone, but this is the level that I've mentioned this morning for us to get a little bit more comfortable with deeper extensions to the downside, and up until we could hit this upside support line taken from the low of the 25th of August. Now, don't get me wrong, this upside line is a little bit tentative because we can draw it this way, or we can maybe try to capture that low, but no, we'll stick to this area here. We'll just capture the low of the 7th of January. And as I said, we will aim for the downside if we get a nice good drop below the 109.26 zone. So keep your eyes on down. USDCHF, now I've mentioned this one last week. Basically what I was saying, that if we get a nice close above the 0.9763 zone, then yes, it increases the chances of a potential move higher. Of course, we're not going to drag this one too much to the downside yet. First, we will only aim for the 0.9833 territory here, which is marked by the high of the 20th of December, and then from there we'll take it we'll take it from there at that point. Because again, don't get me wrong, looking at this picture here, you can see that from around the end of January, or should I say from the 31st of January, this pair keeps on rising sharply. So in a way, maybe at some point we could see a bit of correction. That said, nothing's really kind of stopping it from moving higher straight away, and maybe then finding some resistance around here near the 0.9833 territory, and then recorrecting back to the downside. So in a way, something like this could be possible here, but again, for now, given the fact that it still is balancing above this barrier here, the upper bound of the range, this previous range that the pair was trading in, and that bound is near the 0.976263 zone. Given the fact that it's still balancing above it, this kind of reassures the bulls that there is still for them a possibility to lift the pair a little bit higher here. So for now, that's what we're going to stick to. In terms of the downside here, well, I mean, ideally we would like to see not only a drop back below the 0.9763, but also a drop below the 0.9713 zone here, and only then we could aim towards the lower side of this previous range, or to this, in general, to this area of support between the 0.9623 and the 0.9641 zone. So good potential area of support. As you can see how well it was tested here in around mid-January, and also in the beginning of February. So this could be a nice potential target, but only if we get a nice drop all the way here below the 0.9713 zone. So keep your eyes on that one, guys. Let's see if this can continue pushing north. Now, GBPUSD, very quickly on this. We had a nice drift lower. This is what I talked about last week, because what I was saying, that if we get a nice good drop below the 1.2903, then yes, we could see a further decline. Today we are seeing a bit of recovery here, which is pushing the pair back to the 1.2950-52 zone here. But all eyes are on this, of course. Let's see if the buyers can actually lift the pair above it or not. If they cannot, then we could see a nice round of selling again. And actually, let me just mark the recent low, or should I say today's low, which is around the 1.2817 zone. So this basically becomes a new interesting level to watch, because a nice good drop below this area would confirm a forthcoming lower low, and yes, we could continue targeting the downside. For now, you can see that the bulls are really trying hard to push this one back above the 1.2950. Let's see if they can manage to do that by the end of today. Still, don't get me wrong, for us to get excited about the upside, now looking at this chart, we would like to see a push back above the 1.3066 first before considering higher levels. Until then, all this area here could be somewhat of a neutral one, but for now we are more bearish than bullish on this one still, although we are seeing a bit of correction here, and that's the reason why this could still be just seen as a temporary correction before another leg of selling. But for those who are more on the cautious side, you could just wait for a drop below the 1.2870 zone, which is today's low, and this way the pair would confirm the forthcoming lower low, and yep, we could start aiming for the 1.2820 zone roughly around here, which is near the low of the 22nd of November, or we could travel all the way towards the 1.2767, which is marked by the low of the 8th of November. But then again, as I said, ideally we would prefer to see a drop below today's low before considering that downside here. In terms of the upside, as I said, even if it travels above the 1.2950 territory, still all this zone here up until the 1.3066 could be a bit of a neutral one for us. So let's keep an eye on this one. And the last pair for this session is going to be the euro dollar. So we're having a bit of an opposite reaction here. So the GBPUSD is recovering, but the euro dollar is sliding lower, and we are seeing, and this is what I was talking about this morning, basically, what I mentioned was that if we get a drop below the 1.1039, then yes, this would confirm a forthcoming lower low, and yep, we could see a further decline, a even deeper extension to the downside. You can see that initially it tried to kind of make its way to the upside, but kind of really failed to do so. So now, until it's kind of trading below the 1.0939, we will continue targeting the downside. For now, the area that we're going to be aiming for will be this one right here near the 1.0903, and that's basically the low of the 2nd of October. So very good area of support, potential support, of course. Let's see if the pair can travel further south. For now, it's, of course, certainly it's getting dictated by the bears. But if by some reason this reverses back to the upside here and travels, let's say, back above the today's high, which is roughly around the 1.0957, then we could potentially consider maybe a pullback here towards the 1.0991 or even psychological 110 zone, and then we'll take it from there, guys. For now, we're more bearish than bullish on this one, but let's see how this is going to play out today. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, and I'll see you tomorrow. Thank you very much, and bye-bye.